Hello everyone, this is Sergio. I'm going over the templates that we have that I put in the folder for you guys to have. So the template that I'm using right now is the Wealth Creators template. You guys should have that one, and you guys should have the Wealth Creators complete template, which should look like this. So what I'm going to go over first is the Wealth Creators template. And what you should have on this template right here, you should have the RSI. It should say RSI 5. So you'll go to charts, indicator list, go to edit, go to period, and change that to 5, and close. And then go to insert indicators, fractals. And you want to make sure it stands out, so make it red. There you go. So the Wealth Creators template, this is basically all you need. Um, what is the RSI? RSI is a relative strength index, and that just shows the strength of the pair, what's happening at the moment. So as you can see, whenever this was, whenever this line right here is above 70, that means it's overbought. Whenever it's below 30, it's oversold. So if it's overbought, it has to come down. If it's oversold, it has to come down. I mean, if it's oversold, it has to come up. There is limitations to this indicator. So the limitations for this indicator is it only works in sideways trends. So which means sideways trends is that it's just going up and down. That's all it's doing. All it's doing is going up and down, up and down, up and down. If it's going, if it's in a downtrend, this indicator won't work for you. If it's in an uptrend, this indicator won't work for you. So clear example. Right here, the moving averages crossed, and now we're in a downtrend. But as you can see here, the indicator is just falling. So normally, if this was right here, it's normally supposed to go up. Once it reaches over here, it's supposed to go down. Once it reaches below here, it's supposed to go up. But as we see, it's just falling and falling and falling and falling and falling and falling. And this is just falling and falling. So as you can see here, look, it came up, right? It was trying to come up, and then it just kept falling. And even though this came up, it still went back falling again. So anyone who does not understand the limitations of this indicator, they would have probably took a trade here, and then they would have seen this pin bar right here, or some people call it a dragonfly. This is um, a reliable reversal pattern. But as you can see here, it was the downtrend already started. So it came up and then it just started dropping and dropping and dropping and dropping. People would probably got in right here, messed up. They probably would have got in right here, messed up again because it kept falling and falling and falling. Now, fractals. Fractals was created by this guy named Bill Williams. And what fractals does, it basically, what people don't understand or show, fractals basically show you the demand, the resistance zones that are on the chart. So clear example, um, it shows where like levels of the chart where things bounce off of each other and where the market is bouncing to and from. And this is how you would trade a trend. This is how you would trade trends. So now you see the down arrows right here. All you got to do is now create a rectangle and wait for it to pass. Wait for it to pass these arrows. It's gonna come back, bounce up. You would have put a pending order right here. Put a 30 pip stop loss. Boom. Trade. Same thing in an uptrend. Plain, very, very, very simple. Now the moving averages. This is an SMA of 34. Whenever the market passes this, it's safe to say that if it's below the 34, it's a downtrend. If it's above the 34, it's an uptrend. This is a 13 EMA moving average. Basically, price normally bounces off this area. Once it crosses it, and it crosses 34, things are, you got to be very clear, very wary about what's happening. The volume indicator. We're gonna dive into this a lot more later, but the volume indicator is basically letting you know where all the high transactions are and what's happening. So when you see things like it's oversold right now, right? But here, when you look here, activity, high activity began to happen right here. So see, this would have been a trade I would have took going up. Why would I have taken this trade going up? Because it kind of already passed our little resistance zone that was right here. Engulfing pattern, came back, retested this little zone. So go back up. I could have took that on binary. You'd have been caking it right now. That's the template, and it's simple, guys. I want you guys to understand that this is very, 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 very simple. This is really the basics of all you need for trading. You shouldn't. There's a lot of people who use like trader dynamic index, and they use the stochastic, um, and when they trade, some people, like, for example, when the for the TDI, when it comes out of the bands and then it comes back in and crosses um, the trade signal line, that could be your safe entry trade to get in. And then once it comes back down but doesn't come out of the band, there goes divergence. That's too much. It's too much going on. And if you don't fully understand the user indicator, you're gonna lose a lot. Oh, the 15-minute time frame. And let me be very clear, guys. We are not, when it comes to forex, we are not trading anything. We're not analyzing any charts below the hour. Anything below the hour is just ridiculous. It's chaos. There's no need. If you're trying to get, 20, 30 pips, then by all means you can do that. But we're not here just to get 20, 30 pips. We're trying to get, 40, 50, 60, 70 and above. Higher the time frame, more the money. So if you're doing binary, you would do your analyzations off the hour chart and then scroll down to the lower time frame to find a good entry point. But there's no need for you to try and go on a 15-minute chart. It's too much chaos. It'll mess up with your mental. It'll mess with your mental game, and it'll just leave you stressed out. A lot of fake outs. You would think it's going up based on the rules, and the next thing you know, it's going down, and you kicking yourself, talking about why this is not happening or how come it was supposed to happen like this. No, no. So how do we use this template? So I did explain in the folder how we are supposed to use this template, but I'm gonna go into a little bit deeper right now, and this is why I say this is really all you need to know. The market can only do three things. The market can go sideways, like you see, right? It's just a sideways movement. It's not a downtrend. It's not an uptrend. It's just going sideways. So that's one way. It can go down like this, right? And then find an uptrend for you. Or the market can go up, uptrend. The market can go in an uptrend. So whichever direction the market goes, that is, you just assess what you see and begin to trade it. So now, how do we know which direction the market is going? How can we assess that and say, oh, this is a sideways market, this is a downtrend, this is an uptrend? How can we figure that out? Okay, there's one of many ways. One, look at the moving averages. The 34 is up here, and all these candles are below it. So we can say we're right now in a downtrend. The candles are also below the 13 EMA. We're in a downtrend. Very plain and simple. Right here, we're in an uptrend right here. Why? Because the 13 EMA prices are above this 13 EMA, and they're definitely above this 34. We're in an uptrend. Plain and simple. Plain and simple. Fractals. How are we using them? Okay. Understand and look at this very clearly, guys. I want you guys to fully understand this. So now, you see these up arrows right here, right? They're like in this little zone, right? And here at Wealth Creators, we call these climax zones, right? We're here, these are climax zones. So look, whenever you are able to draw, you go ahead and get a rectangle. You get your rectangle, and you see this zone, you just make it go across, all the way across. Simple as that. Just make it go all the way across. So boom, right? Covered the arrows, it's all the way across. This is a zone. How do we confirm that this? How do we confirm that this is a zone? Now, you see this big engulfing pattern? In order for the market to pass a zone, normally when it passes a zone, it uses engulfing patterns you see here or vector candles. Big giant like long candles, as you can see here. There's a long gray candle, this big candle. So that's confirms zones being passed. It confirms that this is a zone being passed. So how do we know from the start whether this is going to be an uptrend or a downtrend? Whenever you see an engulfing pattern of this sort, okay, we're in an uptrend. We're officially uptrending, and it passed this zone here. So let's say it didn't pass here, right? Let's say it didn't pass, right? If it just stopped right here and didn't pass this, now it would have just been a sideways market. And this here, right here, we now would have been looking at a downtrend. But oh, okay, now it's coming down because it's no longer past this point. So if it passed this and the price started to like dance around here in this little area and then continue to dropping, this would have been our high point in downtrend. It didn't. It went up a little bit more, right? So I would have seen this retest right here. And this is an example. I want you guys to fully understand. I chose this example on purpose. You see this right here? I would have chose this if this was binary, because this is an hour chart. And I want you to understand. Now I want to be very, very clear on too is this is an hour chart. And hour charts, our execution time frame. These are not markup charts. These are what we call our execution time frame. And this is our execution time frame because it lets us get a better entry. Our markup time frames are the 4 hour. So let me go ahead and make that. Let me go ahead and make that clear. So as you see here on the hour time frame, made this horizontal line right here. But on the 4 hour, it wasn't really much of anything. It didn't really do anything. That was pretty much it, right? So how do we confirm our trade to make sure that our trade is correct, right? So when I create, let me give an example right now. So you see this zone, run a 4 hour chart. See how these arrows right here? Here's a zone, here's a zone. Right? Boom. Right? I create the zone. This is like the zone where all the arrows are at. I'll go down to the hour. Once I go down to the hour time frame, you see this? I could have took it right here. Boom. That could have been a trade going down. And I could have just held it. Like, oh, boom. Took it. Boom. It dropped. That dropped for 103 pips. Right there. A day later, we had 103 pips. Why did I enter here? I entered here because it got overbought right there. Since it got overbought right there, boom. Plastic. Simple. I even want to